Hello and welcome to the Zurich Debate. My name is Simon Evenett. I'm the chairman of the Academic Review Board at Project Firefly. I'm also a professor of economics at the University of St. Gallen and head of its MBA program. I'm here today to coach you or take you through a debate we're going to have on income protection, which is an interesting concept which has been getting a lot of attention recently, in particular on social media, with the help of friends from Zurich. And this idea relates to important labor market and demographic developments that we have seen in the last few years. Of course, with the global economic crisis, people are aware of the idea of unemployment and spells out of the labor force. And we typically associate those with being relatively temporary, or at worst, maybe for a few quarters. However, the notion of an income protection gap arises when people are out of the labor force for substantial spells of time, and it may well be related to labor market outcomes, but could also well be related to health outcomes and disability and alike. And of course, the question arises, how can people maintain their living standards during such a period? Now, traditionally, in many countries, especially industrialized countries, we've had welfare states which have sought to do that. However, the degree to which they do so differs markedly, and of course the level of income associated with payments from the state may well be well below what people previously earned. This then creates, I think, a need for financial assets and saving, and what our friends at Zurich, I think, have comprehensively demonstrated in their research is that people tend to underestimate the propensity for them to be out of the labor market for any length of time, and therefore they undersave, and the level of provision, financial provision for such adverse outcomes tends to be worse than it should be. This then, of course, begs the question, what should we do about this? And of course, one could turn to the state, but I think what we have here is an interesting possibility for private sector action as well. We know that great private sector companies don't just make profits, they also help their clients and customers solve fundamental problems. And I think one of the interesting questions before us is how insurance companies and other financial companies and how employers in general, acting as private sector, of course, employers of talent, can seek to alleviate this income protection gap and encourage employees to make better provisions for themselves. And I think that's a fundamental question which we will be addressing. It's of relevance not just to industrialized countries, but to workers in countries all over the world. And of course, in many emerging markets, the social welfare safety net is much more precarious than it is in the West. And so we tend to worry about how people there also are going to adjust to these adverse shocks. But first, I'm going to introduce Daniel Radulovic, who is joining us today from Zurich, and he is a proposition manager, a member of the executive staff at Zurich. He's the originator of the Zurich Enterprise Challenge, as well as being responsible for expanding, enhancing, and promoting the Zurich Risk Room, which is a tool which I believe some of our participants will be using today. And Daniel, I'd like to welcome you to this debate, and perhaps you could share some thoughts with us. Daniel, please.
Thank you very much, Simon, for that wonderful introduction. As Simon said, my name is Daniel Radulovic. I am the proposition manager for the Zurich Risk Room. It's a proprietary tool that Zurich has developed over a number of years, dating back to 2007. We started development of this tool as a way to visualize country risk and use the tool as a way to provide our customers and our internal stakeholders with a customized method of calculating and quantifying country risk. We started out with 37 risks. Now the tool contains about 88 risks, and we continue to expand the universe of risks so that we can apply it to different scenarios. Primarily, in the beginning, it was a tool that we used to look at country investment. But as we've seen through the Zurich Enterprise Challenge, there are numerous different applications to the tool. And most recently, we have started using it as a way to identify the income protection gap in various countries around the world. This is going to be part of Zurich's thought leadership initiative for the next 3 years. And it's something that we feel is really important to highlight not only the current gap, but also how to minimize the gap and how to protect societies from this risk going forward.
Well, thanks for providing the context there. Now what I'd like to do is to turn us turn to the three participants who I'm going to try and introduce in turn. So the first participant I'll introduce is Bruno Conceicao. Now, Bruno is joining us from Birmingham in the UK. And he led, or rather was the team captain of the B2R strategies group who are competing in the Zurich Enterprise Challenge. And they were working on a challenge for Nestle, which I think they did exceptionally well with. Now, let me tell you a bit more about Bruno. He is from Brazil, and he has 10 years of experience in multiple industries in the UK and Latin America. So welcome, Bruno. And it's good for you to be with us. Let me turn now to our second MBA participant, which is Abhirup Mukherjee, and he's joining us from Madrid in Spain. Now, Abhirup was the team captain of Madrid Partners, which did a project with Grupo Bimbo, which is the most important baking company in the world. Now, Abhirup is from India and Australia. He was a graduate of the University of Adelaide and is now an MBA candidate at IE Business School in Madrid. Abhirup's background is very much in the trade and logistics area, and so I hope he can contribute a lot to the debate as well. So welcome to Abhirup. And thirdly, I have Abrar Khan, who is joining us from Vancouver in Canada. He was the team captain of the Sauder Sharks and was working with Lennox International Incorporated, which is a worldwide provider of climate control products, on the corporate case which he did for the Zurich Enterprise Challenge. He's on the MBA program at the Sauder School of Business at the University of British Columbia, and he's originally from India. He's a supply chain professional and also has a degree from Northern Illinois University. Well, we have then three MBA participants. So with no further ado, let me turn back to Daniel to chair the debate. Daniel, please.
Thank you very much, Simon. And thank you, participants, for joining us. And I think we're going to have a very interesting, very lively debate today. I'd like to open it up to Bruno first.
Thank you, Daniel. Thank you, Professor Simon, for having me here today. I will start by saying that in developed countries, there's always been an over-reliance in state welfare for support in the event of one being unable to work and provide for his or her family because of an accident or disability. And as been said before as well, people fail to consider the great impact that a lower income will have in their own household. I mean, here in the UK, for example, the state pays less than £90 per week for those unable to work. And this is well below the national average income. Imagine having to support a family of 5 with that income. Additionally, apart from business, economic, and political factors, culture and education plays a key role in a person's predisposition to save and ensure their finances and earnings to build financial resilience. And when I say culture, I mean national culture, and also the one within the family unit or household. Kids and young adults, they must be educated that the state is not the greatest source of income on the unfortunate event of the main provider being unable to support himself or her family, or his or her family. I believe also that not only governments and insurance companies, but also parents, schools, and employers, they have a duty of care, and they should work to increase awareness of such a risk that could happen to everyone, irrespective of their level of income or lifestyle. And lastly, I just want to highlight as well that income protection insurance is complex, as there are many factors that need to be considered, such as when does it start to pay out, or how long does it last for, what constitutes as an inability to work, and then also from which provider the people should get the insurance from. Recently here in the UK, there's been some scandals on banks inappropriately selling PPI products, and that can be a little bit discouraging for the general public.
Thank you very much, Bruno. Next, we'll hand it over to Abrar.
Thank you, Daniel. Good afternoon, everyone. I'm calling in from Vancouver. So initially, at the very outset, I would like to thank Zurich and the Project Firefly for giving me this opportunity to be part of this interesting debate. Income protection is a relatively new topic, and it's been gaining more traction in the market because of the recent reduction in pension plans and social insurance by a lot of countries because of the economic crisis. It's a tendency of the people to underestimate the risk of disability they have in today's world. People think that just by living healthy, eating healthy, driving safe, they're immune from any kind of disability, which is not the case. Almost up to about 25% of the people are at risk of getting some kind of disability in their work life, and this is something that is not being noted by people, and awareness, I believe, is a major issue why this is not well known across the globe. Having said that, uh, there are a lot of factors that go into defining what kind of package or these people need when it comes to income protection plan. So again, from when it starts, how long it should last for, what's the amount of money they need to sustain their living lifestyle. So I think the Zurich risk tool really helps in capturing these factors and coming up with a significant model which could help in calculating such numbers and come up with a plan for this.
Thank you very much. And next, we will go to from Abrar to Abhi.
Thanks a lot, Daniel. I want to thank Project Firefly, firstly, for giving me this opportunity. Now, in my argument, I will try to incorporate most of the countries in the world. I want to say that this income protection and pension gap, this particular thing is a lot of the people are dependent on the government agencies and state-owned enterprises and other quasi-sovereign entities. Now, what happens over here when somebody gets so dependent on these institutions is that it leaves them vulnerable to certain risks which are beyond their control. So first of all, I want to bring into notice the aspect of state failure. If you see in the heat map, most of the developed countries are immune to this risk of state failure because they have a rather stable government. But if you check that these developed countries, if you check the fiscal austerity risk of these developed countries, you will see that these countries have very high public debts. And therefore, when they go for a fiscal austerity, for a year of fiscal austerity, the first victim will be the pensioners and people who are suffering from income gap. Simultaneously, I would like to bring into your notice the demography shift risk. Here, we can see that North America is relatively not so much at risk as what Europe is. Europe has a very aging population. This means that a lot of people are going to retire very soon. There will be a large gap within the markets. Developing countries like India do not have this because the population is relatively younger than the developed countries. All these risks coupled together with inflation makes me come into this conclusion that the pension gaps and the income gaps will continue, and the current pension schemes will be hard to sustain. Having said this, I want to bring into your notice the risk of informal economy. What happens in most of these countries is that when a person loses his job or a person is not satisfied with his pension fund, he gets into some kind of employment which the government doesn't get to know, and therefore he is pretty much reliant on that particular income. So informal economy plays a big role in providing a little bit of support to these people. This is the macroeconomic factors that I mentioned. Now coming to the microeconomic factors, incompatibility of wages to current prices, competition in the private sector, firing of employed workers, workplace accidents, they all add to income gap and the pension risks. Now, another thing which I noticed over here is that it is a bit of a cultural thing. Let me differentiate between the culture of, suppose, Germany and Spain. The families in Spain are extended families. A lot of people have these extended families where the grandfather is supporting his grandchild who has just very recently lost his job. Therefore, these people are reliant on their savings. Having said that, Germany, there are a bit of nuclear families, and so they run this risk of pension gap and income protection a bit higher than the countries who have a relatively bigger informal economy and pension gaps. Now, why these people underestimate these risks? That's because they, first of all, probably they lack the knowledge or are not comfortable to think beyond the status quo that they are currently at in place.
Thank you very much, Abhi. And I think these were very good opening statements. I like that all of you have touched upon the fact that income protection gap is different in different types of economies. It's different in emerging markets versus in developed markets. And I think what I would like to ask is, since you do already recognize that there is a difference and there are different key drivers to the income protection gap, especially when it comes to different types of economies, could you guys elaborate a little bit on what are the primary drivers of the income protection gap in developed markets versus in emerging markets? I know some of you have already touched upon these in your opening statements. I'll turn it over to you guys.
Daniel, informal economy is definitely a danger. You can see countries like Mexico, countries like Latin American sector, they run a huge risk of this flourishing informal economy that is going on. First of all, because of this, the government doesn't get the appropriate data, so they don't know what is the level of the unemployment that is prevalent in those particular countries. So the policies are also skewed. But particular for this particular topic, I would say that informal economies exist on those countries, especially the developing countries, where people have a very good alternate mind. So the minute they lose a job, they are not totally reliant on the government, but they try within their means to find some other source of employment, which bridges the income gap, but it doesn't eradicate it. It's just a short-term benefit that's reaching those people. But in the long run, the policies that the respective governments take, they are skewed and they are detrimental for the society at large.
Okay. Any other opinions from the other participants?
Yeah, when Abhi says, and you mentioned as well about the informal economies risks and what they pose to income protection gap, what I think as well, I mean, the informal economy, they wouldn't be allowed to be protected with a PPI product because they wouldn't be qualified to do so, and I think that poses a threat as well, because some different people, different types of employments, they have different risks, and also some of them, they are not insured at all. So there is a question as well of identifying that. Okay, so the informal economies, they do pose a threat to them. There is a big risk. However, they can also not be insured because of the type of employments that they have. I mean, they're not registered. So it's a bit contradiction there.
Okay, thank you, Bruno. It's a very good point you make. And Abrar, do you have any thoughts on this as well?
Yeah, I just want to add to what Bruno mentioned, that the informal economy acts as an insurance for these type of people who do not get the official income protection insurance. So for them, having that extended family supporting them in certain cases of disability would actually be insurance in itself for these people.
Interesting points you raise. I think I see your point that you guys make, that this is an alternative to bridging the income that you may lose when you lose a job. You know, the one assumption that you're making there, though, is that if you lose your job, you're still able to work. In a lot of disability cases, people that lose their jobs are just not able to work. So whether it's in the informal economy or in the formal economy, they still are not able to earn a living. Also, I think what was touched upon and was very good by I think all of you is that if you're working in the informal economy to begin with, and I think this is where the real risk perhaps should be highlighted. is that you're not paying into the social benefits, you're not paying taxes, you're not paying into the payment protection plans, and therefore, if you lose your job and you rely on income from the informal economy, that further exacerbates your situation because you're not protected in that sector. But Abhi, I think I saw you. I'll allow you to respond.
I 100% agree with you. I 100% agree with Bruno and Abrar in this case. I'm just trying to put an example. A person, a US Marine, or maybe a person working in any of the armies in the world, if he loses his hands or limbs and he's considered disabled for the rest of his life, he sits at home, and there are various forms of, even if he's not physically able to go out and work, he starts an office within his house. He teaches children, gives various motivation speeches, or I don't know, starts some kind of business within the circumference of his house. So that is what I was trying to highlight as the reason why people tend to go for the informal economy. But in families where there is absolute disabilities, people cannot just work in any ways, then what they do is they have access to their extended families who provide them with some support. All I'm trying to say is that they find some way or the other, but then the income gap or the schemes that insurance companies want to bring in to protect these people, they don't think about that very often. Or I would say that that's not the first thought that comes into their mind. The first thought that comes into their mind is, okay, how will I feed my children from now on? Now that I have a disability, what am I going to do now?
Okay, very good point. Abrar?
I just wanted to add one more point to that, to what Abhi just said. And even the credit per capita is an important factor that you need to look into. So if in Europe, there are more people with loans, they want to be assured that they have some kind of income to pay back those loans.
Mm-hmm.
Whereas maybe in developing countries, the per capita credit isn't as high, and they find it less important to have an insurance to cover their income protection. So that's another issue that differentiates between the developed and the developing worlds, I believe.
It's a very good point. Something that we also see, the more leverage that individuals are, the more credit they take on, the higher the income that they need in order to be able to maintain their lifestyle and to be able to meet their obligations. So yes, it's a very good point you brought up, Abrar. That's why we've included the credit bubbles risk as a risk that potentially drives that income protection gap even further. So in that sense, I'd like to actually pose a question to you guys again on demographic shifts. And I think demographic shifts also have a different impact on different types of countries. So perhaps we can start off. What are the impacts? What is the impact of demographic shifts in driving the income protection gap in developed countries versus in emerging markets or in developing countries where the demographic shift risk is actually quite low, as we do not have aging populations. We actually have very high fertility rates, very large families. So talk a little bit about how you see demographic shifts affecting different countries and different markets differently.
I would just like to start, as you pointed out, demographic shifts is different between developing countries and developed countries. I'm going to start with the developed countries because they are an issue here with aging population. I think what is needed as well, it's a greater clarity in communication on PPI, on payment protection insurance, so people are aware of the benefits of having one in the first place. And particularly here in the UK, I think there is also a clarity needed for because of the scandals that happened quite recently with banks mis-selling PPI products, and that can really have a negative impact on trust, on people actually trusting PPI products, in insurance companies as a whole. In developing countries, I think there is lots of opportunities there for insurance companies as well to enhance as well their awareness of these products as well, because especially in some countries like China and India, that there is a lot of social movements, people coming from the lower classes to the middle class to higher classes. There are more opportunities for insurance companies to enhance their visibility.
Okay. Abhi?
I'll just add on to Bruno's point. If I can please ask you all to put in the demographic shift risks on screen. And you'll find out that developed countries are very, very much worse off than the emerging economies. First of all, the developed countries have an aging population, such as if I go to Europe, then Europe is at a very precarious position. They have this aging population, plus most of the developed countries, including the European Union countries, have a high public debt. The problem is increasing in an exponential amount. And the respective governments are trying to trying to practice austerity. So the fiscal austerity risk is adding to the demographic shifts. The first victim of the government policies will definitely be the people who have retired. So definitely the developed countries are definitely at a higher risk. Coming to the emerging economies like India, 60% of the population in India is below the age of 30. So that risk is not going to play a huge role. The developing countries or the emerging economies have a higher population. They have a higher buffer to manage the demographic shifts. So yes, I 100% agree with Bruno and you, Daniel, that these demographic shifts definitely will pose a problem in future. And the current pension schemes are not going to sustain the pressure that's going to be put on their economies. Plus, there is inflation.
I agree. When it comes to developed markets, demographic shifts, we see that people are living longer, and with this, you have additional constraints such as chronic diseases that put an even greater burden on income, as well as a need for longer periods of income earning. I want to go back to emerging markets, and what you guys have mentioned is, yes, in emerging markets, demographic shifts are not so high, and I think that's a good way to look at it from a pension gap point of view. But if we now think about it from an income gap point of view, which is before you reach retirement age, so you then see that potentially even in emerging markets, there's demographics play a role, just a different type of role of why income protection would be beneficial.
Yeah, what you just said is correct. That when it comes to the income protection gap, we're looking at how far are the people from the retirement age. So when in the developing countries, this gap is huge. So like as Abhirup mentioned, that in India, for example, 60% of the workforce is below 30. So you have a 30 to 35-year gap right there, and the probability of having a disability in a 35 years gap increases. So definitely there is a lot of scope and importance of the income protection in countries in the developing world because of this huge gap between the retirement age and the current age of the population. And the families are also growing in these countries. So with the increasing population, they have more. There's a single bread winner, and they need to support a larger family, which increases their responsibilities and their need for an insurance to cover this income gap. And also, for a breadwinner, his parents, for example, would also tend to live longer because of improvement uh, in medical conditions and access to medical care, healthcare. So the family just grows, and it's just that breadwinner who needs to really make sure that he has the money flowing to take care of everyone.
Bruno.
I'd just like to add what he just mentioned right now about the demographic shifts in developing countries. Also, I think the fact that in developing countries, people cannot rely as much in state welfare as people do in developed countries. I think there is a greater need for them to have these PPI products, to being more engaged with payment protection insurance, just especially if they are on a higher level of income, because on the event of the breadwinner, as you said before, loses their job or are unable to support their family. I mean, what's going to happen then? I mean, if in case they do have this sort of insurance, it would mitigate their risk of having a great impact on their income level. So I think there's a lot of opportunities there in developing countries.
Excellent. And Abhi, did you also have something to add?
I just want to raise this point that there are so many issues going on currently in these emerging economies and particularly the least developed countries, that the thought of income protection or the pension gap is a little bit, it falls behind. First of all, the incomes of the people in India or the least developed countries, consider Bangladesh or an emerging economy like Indonesia, the income of people is so low that they won't be able to afford another insurance policy that will protect the little bit of income they are having now. Secondly, I would just like to contradict Abrar with respect that that families are becoming more nuclear now. Previously, people had joint families. Now it is getting more nuclear. The only reason why it is becoming is that there is no single breadwinner at the moment. There are all the people are trying to contribute in some way or the other, and because they are not being able to contribute in the large scale, families are breaking away and becoming nuclear families and living in the urban cities in small shanties or small flat apartments. There is a thriving middle class in these emerging economies who are trying to get health insurance, but around 14 or 15% of the population is below the poverty line, and it's natural that they don't have any health insurance.
Very good point, and I do understand that in poorer economies and lower income economies, it may seem that income protection would be too expensive, but you also have to think about it on a relative basis. As people are earning less in those economies, they need less protection on an absolute basis versus, let's say, developed countries where you have a higher cost of living. So, point taken that even on a small percentage basis, that income protection may still be a large amount for someone in an emerging market to pay. Bruno has touched upon a couple of times on the issues that we've had in the UK with companies mis-selling payment protection programs, and this has had a big impact on the faith and on the trust that people had in these products. But I'd like to be a little bit controversial in the last few minutes. Health insurance has become compulsory in many countries. The United States now, United Kingdom, Canada, Switzerland, many other countries require individuals to have health insurance. Some of it is funded through the state, some of it is funded through private companies, but nonetheless, health insurance is starting to become a compulsory mandate in many societies. What do you think about payment insurance being also compulsory?
Well, I think in the near future, PPI will need to be compulsory in some countries, as the government is not going to be able to support, especially in developed countries with the aging population. I think for the governments, it will be beneficial for them to impose people to hire this payment protection insurance, because then it's going to reduce their cost in welfare payments in the long run. The best benefits for the individuals, for society, and for the government as well. I think if that's going to be realistic, in developed, if it's going to start at some point, it's going to be starting in developed countries first. I think where the aging population, it's a bigger problem, particularly here in Europe. I think in a few countries, and especially like Germany, because it is in their culture as well, having this long-term orientation on protecting themselves on events of their being unable to support themselves. I think that would work. In developing countries, I think it would be an issue there because of the level of income that they have. It is, of course, I mean, if you compare the cost of living with developed countries in developing countries as well, it's a massive difference there. But however, in developing countries, if you compare the price or the cost of living with their income, it becomes unrealistic for them to be imposed to get insurance in some sort.
Great, thank you. Abhi?
I'd just like to point out to Bruno that even if a government wants to put this pay-in protection scheme, where will the money come from? The money will be coming from the taxpayer. Now, I just want to know that whether Bruno wants to pay taxes, knowing this fact very well, that his money is going into support a person who's not as motivated to work or he is not as motivated to find employment as he is. This is a factor that I'm seeing in Australia. There's a huge debate where a taxpayer's money is being used to provide protection to people who are not motivated to work, and the system that is prevalent in Australia is the number of family members you have, the more money you get, even doesn't matter whether you're employed or not. So basically, that is an incentive for people to take childcare benefits and provide all sorts of benefits to their children and their kith and kin, and at the same time not putting a single penny on the economy. So I do not think that pay-in protection is a good idea. Yes, private insurance companies can definitely leverage on this fact, but a welfare state taking this responsibility, I think it will create further problems.
And I think it's important to understand the distinction here when it comes to the payment protection gap insurance. We're not specifically talking about social benefits for unemployment due to losing a job because of, let's say, economic activity. We're really talking about disability and losing your ability to work due to illness or disability, not due to economic factors. So again, it's important to make that distinction. Abrar, do you have anything you'd like to add?
Yeah, I just wanted to mention that the disability is something which needs to be looked into as to what countries develop versus developing, which countries have more risk in terms of the possibility of someone getting disabled during their work life. So, for example, we've seen that in Europe it's up to 25%, which may not be the case in India. And such things could be using the risk scoring tool. Basically, we can find these different risks that will help us analyze which countries are better in terms of going forward with these insurance. I agree with the other panelists that it should not be something imposed by the government. Maybe it's probably better to have it privatized and have private insurance companies offering these insurance plans to the countries, to the individuals, I mean. And compared to developed versus developing, I still believe that developing countries, it may not be the right time, as I think the overall credit per capita is far lower than what it is in the developed countries, and this will factor in a lot when people decide to take such kind of insurances.
Okay, excellent. Thank you guys for your thoughts and for your contributions. A lot of good ideas from all of you. I'd like to just get your closing remarks, get your closing thoughts on what you think is really at the heart of the issue, what we can do as a society, as individuals, as governments, as corporations to bridge this gap? And any other closing remarks you'd like to add on the topic? Okay, Abrar, please go ahead.
Sure, thanks. I think awareness is a major issue at the moment. The people are not really aware of this protection plan being out there, and like any other insurance, it takes some time for it to gradually grow and get some traction, be it life insurance or healthcare insurance. In the past, we've seen that it took quite some time to get popularized. So similarly with the income protection plan, I think it's just a matter of awareness and time that it's going to get popularized. With social media in place and the digital world, I think it's going to be much faster. So having awareness is key. I think that would be the major factor that would help people understand what they need and how it's going to go forward.
So excellent. Thank you very much, Abrar. Bruno or Abhi, either of you want to take it next?
I would like to highlight as well that there is a need for greater clarity in communication, particularly in building consumer trust in PPI and insurance in general as well. I think PPI is a great product. One way of doing so, I think, is showing people how their lives will be affected, showing real life examples. For instance, there are charities out there like a charity-led campaign called 7 Families that highlights the need for people to plan financially in case they become too ill to earn an income. And also, I think the insurance industry should work together with the media and all other potential partners as well, such as trade unions or membership organizations, to create new points of access for people to get PPI products.
Excellent. Thank you, Bruno. Abhi, do you have anything else to add?
General awareness should be increased. People should be made aware of the macroeconomic factors that are affecting their income and pension schemes that are prevalent right now. I am totally in favor of having insurance policies that are going to bridge this gap, but I would still like to have this role to be played by the private sector and not the public sector and the governments. The governments can definitely make policies, but then the private sector should take steps to make the people aware of their various schemes and make them aware of what lies in future. So yes, and microinsurance, as said by Daniel, is definitely one of the really good ways to bridge this gap.
Thank you, Abhi. So, with that, we're coming to a close to our debate here. First, I just want to thank all of the panelists for your contributions. I think you've really highlighted some interesting points. We definitely have picked up on the point that we certainly need a lot more awareness of this issue and of this risk. We need to focus a lot more on educating individuals in societies and highlighting different examples of what a loss of income for a prolonged period of time could mean for those individuals, and as such to develop solutions that meet those individual needs and provide those solutions in a way that is affordable so that people will take them on and understand the benefit of paying into those policies and what that will mean for them, for their families, and for their ability to maintain their quality of life in the event that they are unable to work. So I think this was a very good debate. I appreciate all of your time, and we will be taking these points on at Zurich as we continue to work on this topic, as we continue to work on raising awareness and educating the public on this particular issue, as well as coming up with solutions on how to help individuals protect themselves from this risk of an income gap. So with that, again, thank you all very much, and I'd like to hand it over to Simon for his closing remarks.
Thank you, Daniel, and thank you all for contributing to this Zurich debate. Let me try and offer a few thoughts of my own in conclusion. I think very much prompted by the discussion that I've heard in the last hour. Labour market shocks, which we really drive the demand for this particular income protection. And of course, Daniel mentioned, and many of you mentioned disability and alike, and we have in mind here, I think, much more permanent or semi-permanent shocks to people's ability to earn incomes. But I wondered if that's really a problem, and I take it that it is, that we ought to think about what factors drive those adverse outcomes and whether or not we need to be thinking also about safety at work legislation and the role that that can play in helping to help reduce this problem, as well as what encouragements or indeed laws do we want to put in place about people's lifestyle choices, which could ultimately bear upon their ability to earn an income over a long period of time. So there's dimensions of this, of the drivers of these adverse labour market shocks, which I think are really quite interesting and could be unpacked as well, and could suggest that there could be complementary measures taken in other parts of society and the economy, which could support attempts by the private sector and insurance companies to reduce the income protection gap. The second dimension, which I think came out very nicely in the discussion, is where are the alternative sources of support for individuals. And it's interesting that a lot of emphasis was put on families as a support unit. And indeed, historically, families have been an important source of insurance against adverse outcomes of all types. And it's interesting to hear some discussion about the importance of that coming back or perhaps being raised. Then, of course, there's the question of to what extent can the state be relied upon to offer such support, especially in an era when many governments are heavily indebted and are undertaking austerity measures. And so that, of course, then begs the question, well, if there are no family-based or state-based solutions to this problem, then we need to bring in other solutions, potentially private sector solutions as well. And then when we turn to the potential private sector solutions, I do think we got started on essentially the key, the key concerns here. And of course, this is an area of potential insurance where we have to face some very serious adverse selection and moral hazard problems, the classic asymmetric information problems, which are endemic here, and again, linked nicely back to questions about lifestyle choices and about inherited traits and also risks at work. So I think those concerns will affect the efficiency with which any private sector market operates in this area. These points, I think, in other aspects of insurance are well known to insurance companies, and they often try and find creative solutions to them. And I think here we would have to think about how to address those challenges as well. So I think this is perhaps this is a good place to stop, trying to link those three components. What is the driver of the problem? The labor market, adverse labor market shocks, which tend to be semi-permanent, the disability and the like, the alternative sources of support, and the challenges facing the crafting of private sector solutions to the income protection gap. And I hope these thoughts, these food for thought for Zurich as it goes forward in its thought leadership exercise over the next 3 years, as it discusses this issue, which has been before us today. Well, let me finally conclude then by thanking our 3 MBAs for participating, by thanking Daniel and his colleagues at Zurich, and also by thanking the team at Project Firefly for helping to organize this debate and to execute it here. Thank you very much, and I hope you have a wonderful weekend. Goodbye.